Hello, everybody, and welcome to episode number 86 of Confessions of a Market Maker. I'm your co-host, Ray, aka All Day Ray, aka Daddy Warbucks, and I'm joined here by my illustrious co-host, former market maker of 20 years and current day retail trader, the former nightclub bouncer who has more knowledge of club life than the Batabi brothers. He's taught you how to think like a villain, the Gorilla of House Street. JJ, how's it going?
Good, brother. How you doing tonight?
Doing great, man. And I know I've mentioned this a little bit on some of the recent podcasts, but you've recently moved from Regina, Saskatchewan to London, England. How's the big movement?
It's great. I wish I had done it years later, earlier. Boy, it's a great city. Well, any place is great compared to Saskatchewan. I mean, and I don't mean that in a rude way,
Mm-hmm.
but just even weather-wise, I'm not frozen anymore, which is always a plus. But no, it's nice being in a city again. I love the crowds. It's and people are really friendly here, and the weather's a lot better than everybody said it would be. I mean, it rains barely. It barely rains. I mean, I lived in Vancouver for 27 years, and it rained like every day there.
Mm-hmm.
So, this is nothing compared to that. It's been sunny since I got here. It's a great place.
Love to
You
hear it.
know,
Love to hear
yeah,
it. Love to hear it.
yeah.
Yeah, shout out to the good people of Regina.
Yes, I
What
love those people, but that weather, man, it'll break you.
it's a tough one. Yeah.
Yeah.
Do JJ, do people think like when they hear you, right? Obviously, it's a North American accent. Do
Oh
people
yeah.
think you're American? Like
Yeah.
what are interactions with like with the with
E- Yeah. Everybody thinks I'm an American.
yeah.
And the funny thing is, they all go, "So why are you here?" And I'm like, "Oh, I moved here to be with my girlfriend." And they're like, "Why wouldn't you take her to Canada?" I'm like, "Have you been to Canada?" You know, in the wintertime? They're like, "No." I'm like, they all think Canada is this like magical place. And, the people are great and everything, but, minus 45 in those winters, I wouldn't do that to my girlfriend. That's pretty bad. London's got the culture and it's got, all
Yeah.
this, museums. And, the other thing is I haven't driven a car in like over 3 months. It's great. I dropped 24 pounds just walking around.
Excellent.
It's
Yeah.
great. Yeah. Much healthier.
Love it. Yeah.
Yeah.
Love to hear it. Awesome. Awesome. All right. So just a reminder, quick reminder to listeners, if you guys would like to join JJ and myself in a supportive community of traders, you can join us at microefutures.com. So, it's cool, JJ, to get back to just doing a podcast, me and you.
Yeah,
Um,
definitely.
it's good. I know it's been a while. So it feels good to get back to this. And so today we're going to be discussing this year in trading. I know we're a little way like halfway through the year. Very eventful year. A lot of global stuff going on. I guess just to start, JJ, what have been, I guess, just some of your general overarching thoughts on this year so far?
Well, the guys in our trading room in the futures room in October and November of last year, I was warning everybody that this market's going to change. Primarily because the way the markets were in the prior 2 years they were just marking the market up. Pretty much, remember, we were getting like a new high every week, every day.
Yeah.
There was no supply. We're in that business model where all the large money managers hold these massive positions and they hold so much stock they actually can't sell it. So, the market would like just keep going higher and higher, and the liquidations were just caused by margin calls. And then after they marked it up to 4,800 on the old S&P, boy, everybody got their bonus. Everybody got paid in January. And, you'll forgive the metaphor, but man, this thing came off like a prom dress.
Mhm.
Like it just fell apart. And because we don't really have a lot of bid support from investment money, like, Linda Ratchke says, trading sardines and eating sardines. So I say investment money and trading money, and we don't have a lot of investment money in these markets. It's all trading money. And that's why we have these massive ranges. So I've been trying to prepare our guys to be able to trade this. And it's some days, it's pretty crazy. You get 150 point ranges in this thing, and it's just the volatility is not that bad. It's not like it was during when we were trading COVID,
Mhm.
but just to lose to go from 4,800 down to 3,700, that's a lot of S&P points. And that hurt a lot of people. A lot of people who were trying to buy the dip didn't realize that the bid was gone. And the short sellers were holding this thing up. And short sellers, when they're trying to buy back stock or whatever they're trying to buy back, if they see any hint of supply, man, those guys scurry like cockroaches when you turn a light on in a New York apartment. They're just poof, they're gone, right? They're buying it like $10. They see a little bit of supply, boom, they're bid six. And then the markets just fall right into their bids, and then they just keep dropping and dropping and dropping. And a lot of people weren't prepared for that. It's very strange. This market, has been, it trades like a stock that has been short squeezed and then falls apart.
Mm,
And that dynamic has made it really tough to trade. Another thing too is a lot of these, you know, a lot of these fly by night stocks that did really really well in the last 2 years because of all this cheap money. There's really no bid for them anymore. You know, um, to last 2 years, people were buying anything. They're like, oh, what does that do? We don't care. Does it make money? I don't know. Buy it, right? And it would go up, because everyone was marking up positions and having a grand old time. And now people are like, oh, you look at companies like Uber. I mean, I use Uber in London. It's the first time I've ever used it. I mean, it's a great service, but they lose like $3-4 billion a year,
hmm
right? Now, in the old days, if you were losing that kind of money, you'd be going bankrupt instead of going public, right? Now we just unload that crap onto anybody who will buy it, and it's one of these days people are going to go, hey, maybe I should invest in something that actually turns a profit, and we've seen these companies just, I don't know. I think um, you know they don't really care about their shareholders. None of these deals. I mean, if you look at some of these companies, the way they issue free stock to themselves,
hmm
uh, you know, poor retail and shareholders and even institutional people, they're buying this stuff at $100-200 a share, and these companies are just selling stock that they've issued themselves for free. You know, into this dollar volume. You look at companies like that WISH and even PLTR and companies like that, that were like the darlings of Wall Street.
hmm
Um, now good luck trying to find a bid. So there's going to be the day of reckoning is here, and let's see if people, this is going to smarten people up. Unfortunately, people have to lose a lot of money to get smart. I know that it happened to me, so I'm not above it, right?
Yep.
Um, you learn your lessons the hard way, right?
Yep.
And I think going forward, people are going to be a little bit more careful where they deploy their money,
hmm
instead of just, as we used to once say, just close your eyes and go long, right? That's,
Those days are
yeah,
over.
those days are over. It was a fun time, but
Yeah.
things are a little different now. These guys might have to actually earn their way out of this.
Yeah. Yeah. I for as far back as I can remember, JJ, probably dating back to when we started the
Yep.
podcast, I always recall you saying like it's scary where we're at in the market. It's scary where we're at in the market. Like once this comes apart, to use your
Yeah.
phrase, it's going to come off like a prom dress. Um, we just didn't know when it was going to
Oh,
happen. Um, and it's interesting. I'm just thinking too, like as you were talking about that, like all like the darling stocks. I don't hear no one talking about it too much. I mean, I see it a little bit here and there, but do you remember SPACs, JJ?
yeah. Oh, yeah. SPACs are,
I know they've just
fancy
gotten
show. Yeah.
hammered. It's gotten hammered, haven't they?
Oh, everything's got. I mean, Jesus, look at Netflix. I mean, could
Yeah,
you imagine owning that thing at $600 a share?
yeah.
I mean, dear God. I mean, that's more criminal than any penny stock whammy that I've ever perpetrated.
hmm
680 to $700. Now it's trading 181 bucks. You know, Geez, it's just, there's just so much value and money that has been wiped out.
hmm
And yeah, we'll see. And I'm not even sure we found a bottom yet here.
Yeah,
The
yeah.
way this thing trades. I think the only reason that it's kind of, we hit a low and now we just get these short covering rallies, and then we'll see. I hope this thing stabilizes, and people can kind of claw some of their money back.
Yeah. Yeah. Let's hope so. These type of, events, like, I guess, like what you're saying, like, in reference to, I'm assuming why you're saying it's, in years past, like how the market's trading is scary. We're up here.
Oh yeah.
Is, because we would always joke about the pet clothing and the
Oh yeah.
pricing of this pet clothing, right?
Oh
And so
God, yeah.
we need things like this to happen, right? To kind of like wash out a lot of that, you
Bring
know.
people. Yeah, people need to come back to reality. I mean,
Yeah.
people are just spending so much money. Like it's just everything has just gotten so out of hand. My girlfriend and I, we were in Harrods, the fancy British department store, and
Mhm.
she wanted to, we're looking at some perfume that she was buying, and it was like 140 pounds for a bottle of perfume, and she used to buy it for 50.
Mm.
Like not that long ago, and it tripled in price. And it's like that's just little things. Everything has just gotten so expensive. And people didn't care about that. There's I had clients that I was trading for, and they were buying ripped jeans for $1,000 a pair, and just people spending $400 million on pet clothing for Halloween. That was just it's these are things that happen when there's way too much free money in the system.
Yeah.
Or cheap money, I should say.
Yeah. I had to wash that out.
Mhm.
JJ, I'm curious, like, taking it back to your heyday, um, when you were doing your thing, when you were running deals. I'm curious to, like, I know this environment is different than, maybe like past bear markets or things of that nature, but I'm curious to how, like, a bear market would maybe change the way, like, you would operate running a deal. Is it harder to bring in
Uh,
buying, or it not really?
Actually, you know what? Yeah, in the cheaper penny stock thing, bear markets were great for us
Mm,
because we found that people would lose money trading large stocks, and they wouldn't have much money left, so they'd all come into that under $5 arena.
mm,
And 2008, 2009 were some of my best years.
wow.
We just and because the thing is when you have hundreds of millions of shares to sell for a group, it doesn't really matter the price as long as you've got tons of stock to sell. So we'd take a stock from 30 cents to a buck 50, and people would be really happy with that because they'd make a double or a triple on their money, and it and we'd keep the thing going for a while so that people would have a chance to get out before we worked it. So yeah, it was tough though. I mean, it is harder. Like, you look at stocks like GME and things like that. Those deals, I mean, when the street took them, the amount of dollar volume they were trading, I've never seen stuff like that before.
Hmm.
You know, and we probably won't see that again for a while. To gap a stock from $40 to 480 bucks is pretty just crazy. And the dollar volume, the amount of actual dollar volume traded in those days were, it was billions and billions of dollars trading in this crazy thing. It was trading, it'd have a week where, one week it would trade, like 1.2 billion shares between, 17 and $483.
Hmm.
That's some, whoever was selling for the insiders and, liquidating positions, my God, um, they'll be buying some pretty nice private planes, you
Hmm.
know.
Yeah, I'd imagine. Yeah.
Oh yeah, there's always an insider selling,
Hmm. And so, so JJ, so we've had a lot of, like global headlines and events going on this year.
Oh yeah.
And, I know back earlier in the year, we had a few of, like, those, like, macro guys on the podcast.
Yep.
And, just from having them on, I started, I guess, paying attention a little bit more. And not that I haven't paid attention to, like, macro events, but I never really, I was more of like block the news out and just
Yeah.
trade, which I found out I should always be that way, because I started trying to,
Oh boy.
um, and not like really trade
Yeah.
off of but maybe use it to see, like, okay, maybe, like, I should stay away from this sector. Maybe I should pay attention a little bit more to this sector. And I'm sure there's some validity for some people, but it was just messing me up. Like, not,
Mhm.
I just need to look at the chart. Um, Where do you stand on this topic?
I mean, I think for long, like if you're a size trader
Hmm.
and you have an agenda over a 6 month period or a year period or 3 months, then you work that macro stuff in. But the way you and I trade, we're like get in, get out, get paid, right?
Yeah.
We're like, like we're robbing stagecoaches. Like, we're just, like just jump off the horse, grab the gold, and get the F out of there, right?
Yeah.
And so we're price action, order flow, structure, whatever, technicals you guys are using on the equity side. That 9 EMA that I stole from you guys is beautiful, by the way, for ES trading.
Hmm.
Um, you know, and I really try and block all that stuff out because like for me, I get analysis paralysis. The more stuff I look at, the harder it is for me to execute,
Yeah.
right? And get into that flow state where you're just executing. And if I block everything out and just, I always say it's like if you're trying to cross the street, just watch the traffic on the street you're trying to cross. Don't look at 3 streets over, right? Because you're going to
Hmm.
get hit by a truck. Or, it's just that's my view on short-term trading. Right. And I by no means am I downplaying macro analysis and fundamentals and all that stuff because it's going to, if you have a longer term outlook, then you should play to those things. But, I'd always still look at structure. If a stock can't hold a certain level, no matter how good the fundamentals are, there's something wrong with that stock. Because I look at a chart of a stock like a chart of somebody's heart, like a doctor would, right?
Hmm.
Some of these stocks, you just see them just continually going lower and lower. And no matter how good the press releases are or the fundamentals of the company, if the company was so great, why are the insiders, why do they hold less than 1% of the stock? You know, it's like they have no
Yeah.
vested interest in the company, right?
Yeah.
It'll have like, 180 million shares out, and the insiders will maybe hold 5 million shares, right? If that, they have no vested interest in the company. They're all paying themselves these massive salaries, right? And it's the shareholders are just getting just destroyed. And that's the problem with capital markets, and everybody blames short sellers and all that sort of thing, but it's they never look at the people who actually run the company. Like my company makes no money, but I'm taking down 600 grand a year,
Hmm.
right? And $10 million in stock options and S8 stock and stuff like that. So, if you're an investor, like if you're going to hold a company for a while, you better lift up, the covers and see what's underneath there. I'm a big advocate of that. I mean, uh, you know, uh, because otherwise, there's just no point. If you're buying a stock and it's $20 and the insiders have given themselves stock at 30 cents, you know, every day they're selling at a profit.
Hmm.
And so you're holding it at 10, 20, it goes to 15 to 10 to 5, and then next thing you know, it's penny stock status. While these guys are driving around in Bentleys.
Yeah.
So
Yep.
yeah, it's you just gotta watch. You gotta watch that, and you gotta do research if you're gonna be an investor.
Yeah.
For trading, just follow your chart, follow your price action, and I'm a big believer. It's like Public Enemy says, don't believe the hype.
Yep.
You know.
Yep. Yeah. No,
Yeah.
and I've I've always been of that stance, right? Ignore the news. I try, or
Oh yeah.
the headlines, the global macroeconomic picture. Tried it out for a little bit. Not for me. I've like doubled down on like just block all that out and just,
Yeah.
keep it simple. And I think too, and I'm sure it's not for everybody, who give economic analysis or this whole global picture. I mean, how much of them actually have skin in the game, right?
Exactly.
And
Exactly.
it's easy to give an analysis as opposed to actually getting it into the arena and like mixing it up, so I
Oh,
think there's also
definitely.
that element to it as well,
Yeah,
which is
definitely.
interesting. Yeah. Did you ever, none of this ever mattered to you, right? Like back in the day when you were doing
Oh,
your thing?
oh God, no, no. I mean, I would read the Wall Street Journal.
Hmm.
Just when I first started in the industry, I would read the Wall Street Journal just to learn about the business, right?
Yeah.
But once I was on a trade desk, Oh God, we never even had time to read the news,
What about the
right?
Fed? And none of that mattered, right? Like,
None of that mattered
right?
because
Yeah.
you were working out a position, and then you'd see, there'd be other guys on the other guys in the firm that'd be watching that, and they'd be running around, and oh my God, and you'd be like, did we sell 100,000 shares? Yeah, okay, print it, and it's like,
Yeah.
and then your client's like, am I liquid? Yeah, yeah, we sold your stock, right? Okay, I want a wire. So we were just liquidating positions for the insiders and for the founders of these companies. So none of that stuff really mattered. I mean, unless it was, something really serious, like in 1997 when long-term capital almost blew up the markets because their quants couldn't trade their way out of a wet paper bag. They shut down the market for the day and they sent everybody home. So we were like, oh my God, do we have a job tomorrow? They're like, well, we'll see, right? That stuff like that was, like those kind of things we would talk. But I would still, and I still read the Wall Street Journal and Bloomberg, and just out of, because I like to know what's going on, but uh, does it really factor in my analysis? Like a couple of things, like when we found out that, we looked in the Wall Street Journal one day and they said, there's $800 billion borrowed against equity portfolios. Then we're like, okay, well then, margin call situations can happen, so
Hmm.
we'll have that in the back of our head, but we don't trade it. It just kind of, what kind of environment are we in?
Right. Right. Makes a ton of sense.
Yeah. Yeah.
JJ, you were in the beginning of the podcast, you were talking about how there's not much long term money in the markets, right? People maybe are a little hesitant, like some of these larger players,
Oh yeah.
potentially. So, you know, I'm just trying to get into the head of like maybe what some of these guys could be thinking or how they are going to deploy the capital. What or and I know you read up on these things. You're talking to different people. What sense are you getting out there?
The I mean, I don't really know any serious money managers. Remember we had Shauna Sissel on there, and she
Yeah,
was a CIO.
yeah,
It'd be great to get her back on the show,
for
because
sure.
these are long-term players, and they trade for pension, they invest for pension funds and stuff like that.
Yeah,
And it really really be a good informative thing to get her back on and see what they're looking for to start deploying capital.
yeah,
I know like shorter term traders who are large size traders are looking for this crazy market to start holding settlement, right? And some stability,
hmm,
right? The other thing too is these guys, because they have so much money, they don't have to deploy it, you know? They could sit on it and they still get paid, right? Because they still get their management fees, right? And and they're also paid to be kind of stewards of that capital, so and not deploy it irresponsibly. So it'd be really, and because I've never worked for a money manager or one of those sort of what we call white shoe, like a BlackRock or Morgan Stanley or
hmm.
these larger sort of investment type houses, it'd be great to get somebody on there and see what they're looking at, with the macro and everything to see when they're going to start deploying capital.
Yeah, it's a great
You know,
idea. I think we definitely should.
yeah,
I think here, yeah, I've had this thought, JJ, and like, and first off, like before I give this like a not even like opinion, but like I'm just a short selling schmuck at home, retail trader. So like I'm nobody, but I think I'm like, if you're giving these money managers, you're paying them a management fee, whatever, and they're like, oh no, we're not doing. I'm paying you to tell me you're not doing nothing with my money.
yeah,
I'm like, what the fuck am I paying them for? Like,
yeah. Well,
it's just funny.
you're paying them not to lose your money.
That's true. That's true.
you know
I guess that's a
Uh,
fair point.
that's the one thing. These high net worth individuals have different sort of um objectives, right? The security of their capital and conservative investments and things like that. I think a lot of that went out the window in the last couple of years. Everybody started to become like a cowboy,
Yeah,
and
sure.
got a little, and even some people probably got hurt. um the one thing I do worry about, and the reason we had 1,000 point drop in the S&P is we don't really have a lot of liquidity in these markets.
Hmm.
I mean, if you look at just you know you look at just how much paper Apple trades every day. I mean, today we traded 77 million shares in Apple, and it usually trades about 98 million on the 10-day average, but it's thin. The stock moved 2% on 77 million shares. the problem is large buy or sell orders move these markets drastically,
Yeah.
right? Which is kind of scary, and we see that in the charts. That's why we have these huge ranges, because I always talk about like the investors or that big investor institutional money manager bids. They're like having shock absorbers in a car, right?
Hmm.
And the markets, the way they're trading right now, because though that you know investor money's not present. It's like driving around in a '77 Toyota pickup with no shock absorbers. I mean, the price is just getting bounced around. Like today in the ES, the order book was so thin when Powell was speaking that like a small order would come in and the thing would just jump like 3 4 points and then jump down 4 points. And so that stability that we have, because our market makers are deploying all their capital over these huge ranges, is just is not there, right? And the ranges are big and they're harder to trade. So that's tougher for us on the retail trading level. We have to really pick our spots, and do all that discipline stuff, all the boring stuff that they talk about, right?
Yeah. Yeah.
Discipline and money. It's like, that's so it's but hey, it works, right? So,
It does. If you want to
yeah.
survive, right? It's like, hey, yeah, you
Oh
wanted to
yeah.
trade. It's not always glamorous,
Yeah,
um,
exactly. Yeah.
or but
Yeah.
speaking of big money, JJ, did you see? I saw this today. What Ken Griffin? Is it Griffin?
Yeah.
Well,
Griffin,
he's
yeah.
they're moving the offices to Miami. I
To
saw.
Citadel. Well,
Yeah.
somebody was saying that, or I read I think it was Bloomberg, he was complaining about crime in Chicago, and I haven't been to Chicago in probably 15, 20 years. So,
Hmm.
good people there. I hope things aren't as bad as he portrays it to be. But yeah, Miami, I'm sure our mayor of Miami must be quite happy about that.
Yep,
Well,
he is.
yeah, we'll have
He
to get him
is.
back on the show. He's
Yeah.
but hey, Miami, I mean, I wouldn't mind working in Miami. I mean, if Citadel's taking applications, I'll work the trade desk in Miami. It'd be not such a bad place to live.
Hit us up, Ken. We'll submit the applications. Yeah, yeah, yeah. I saw it. I guess him and the governor. He has beef with the Illinois governor. I don't know. I didn't read much into it other than I saw, Mayor Suarez was
Yeah,
was pumped up. I've been talking with a few people, JJ. Not to get off topic here, but there's been rumblings. I've even read, like, I think it was in the New York Times, about Mayor Suarez potentially like making a play for president.
oh, that would be cool.
It'd be cool for us to be like, hey, we talked to
Yeah,
this guy before he became
well, he's
president,
for
or at least
president. Yeah,
tried.
yeah, exactly.
I'd be like,
And
that'd
he'll
be
be like, "Oh, I don't know those guys."
yeah, yeah.
Yeah,
Oh, that'd be
yeah,
cool. That'd be cool. But
that would be cool.
yeah, so back to the markets here. We listeners know we got a trading room. Um, from your position, JJ, how have you been seeing retail traders fare in the market this year?
It's been a lot harder for a
Hmm.
lot of these folks. People, a lot of these people, it's like sailors. They've been fair weather sailors, and the market's going up. It's been good, but when those storms come, it's really hard, because some days of buying day, the next day is a shorting day, then you're buying again, and being able to switch and not get held up in choppy markets. And there are definitely times in the day where you shouldn't be trading, right, where you're letting the large size traders do their business and not getting in the way.
Hmm.
And a lot of people have just been getting chopped up. It's been a very difficult market, and for a lot of retail traders, and we've been really trying to keep people on the right side. And like you'll see that after some really really bad days, the next day on Zoom there'll be less people, and
Yeah, yeah.
that people have just gotten chewed up. And you tell people to be careful, because I've been doing this for 30 years now. But you tell people to be careful, but unfortunately retail trading is, you're sitting in a room, and a lot of people who come into retail are, they're sort of type A personality people. They're used to taking the bull by the horns and working really hard, and to them to sit and wait for a trade, or wait for the right conditions to come, that just goes against, they're like, I'm just sitting here, I'm not working, I'm not making any money, right? And then they go and do a trade, get stopped out, they go long, go short, go long, go short. Next thing you know, they're down 500 to $1,000, and it's just, it's really, it's been pretty nerve wracking for a lot of people. Um, and I sympathize with that. And even me, like sometimes, I'll when I start trading, I'll just test myself on a micro or two to see if I do a lot of self monitoring. Is like, is my brain working? Am I executing?
Hmm.
Before I even think about sizing up.
Yeah.
Um, it's the only way to do it. You've got to really, test and and just make sure that you can't be too overcautious, but I was taught to be really cheap and preserve capital. So that's the big thing with me. I'll test the market out, see how it's trading, and moreover, I'll test myself to see, am I seeing things right? Am I reacting right? If I'm not reacting right, I got to start reassessing, right?
Hmm.
Um, what I'm doing, or if I'm seeing something, or I'm reading it wrong. So I do a lot of that, like especially on Monday if I have weekend brain.
Hmm.
Now
Yep.
that I actually have a life on weekends, which I haven't had for like 25 years. So it's like sometimes Monday, and I'm like, oh yeah, it was a nice weekend, and I'm like, oh god, I got to snap out of it, and get into the price action.
Yep.
So it takes me a little longer now, which is nice because we have that London session, so I can prep a little bit for the regular trading hours.
Yeah, yeah, the hours are a lot
Yeah.
different, right? Because you were
Oh yeah.
in what, like central timing, and or I know
Uh,
it's switched a little bit.
GMT, Greenwich Mean Time. So it's like, here, like right now, it's what time is it here?
So
It's
well,
almost
you're
10 o'clock,
yeah, so
right?
you're
So I
5 hours in
can
front of me.
5 hours
Yeah,
ahead.
yeah. No,
Yeah.
I was saying like when you were in Regina, you were probably I think you were like central. You were like 1 or 2 hours behind me. I guess it depends on
Yeah.
daylight savings.
Exactly. Yeah. And
Yeah,
Regina doesn't change time zones. You guys would change, so
yeah,
it would just stay the
yeah,
same. Yeah.
yeah.
But yeah, it's good. It's that London Open is a wonderful time to trade, especially for new traders. I
Hmm.
highly recommend it. And I've noticed on the Zooms that people actually get up to trade with me at like 2:30 in the morning New York time, and then they just go back to sleep, right? Because
That's
what
funny.
I say is, you get up, you trade a little bit, make some money, and that kind of takes the edge off the Open in regular trading hours, right? Because then
Hmm.
you're not pushing yourself to make money because you've made a little bit. And so you cash up a little bit before the Open, and that kind of takes that, oh, I got to make money, I haven't done anything today, that takes that and
That
kind
like
of
yeah, wanting the
down.
press. Yeah,
Yeah,
yeah, for
yeah.
sure, for sure. Yeah, I mean that. I mean these are things I remember you always being good at, and like even impressing on me because I think like you willing to like okay put on just like one or two contracts and like being okay with it. I'm like
Oh yeah.
was always in the mindset of like it's always been hard for me to downsize.
Oh,
And I
okay.
mean, like even in poker,
Yeah.
like even if I like lost a lot of money and I had to like play lower stakes, it would fucking pain me because it's like,
Oh yeah.
um, but now I don't have any problems doing that.
Yeah.
And I think it's like necessary. I mean, especially like when we were getting into this kind of like new environment and like
Oh yeah.
some of the like my strategies weren't working how they
Yep.
used to or
Yep.
what I was used to. And so I was like, okay, let me dial it back a little bit. Like you were kind of saying, get a feel for things until I
Yeah.
got the confidence back up and then we could go
Yeah.
back up.
Exactly. And see, the thing is, like, like, when I started in this business, the guys who like the guys who owned the brokerage firms were like 60 or 70 years old. So this was like 92, 93, 94. And so these guys, a lot of these guys had traded and grown up when, the interest rates were really, really high, and there was money was they were so cheap. Like I remember the owner, the guy who actually owned our brokerage firm, his sons ran it, but the old man was worth like $600 million, and he took the bus to work every day,
Yeah.
right? And he wore these like $99 suits, right? That, I mean, they were just like horrible looking suits. They looked like they were made out of cardboard or something. And he was so cheap, and they made us pay. They charged us for staples and photocopying, and I mean, even coffee, they would charge us for coffee in the place. You make these guys like 300 grand a month in commission, and they still make you pay for coffee, right? So. I have that mentality when I'm trading of being, and excuse me, of being like a miserly, cheap old bastard,
Hmm.
right? So, and that really kind of helps your capital preservation, right?
Yeah.
If you're cheap, because then you won't trade all the time or overtrade, or you kind of look at things a little differently,
I
and
I think that's yeah. I mean, and I could, it's like, we have these conversations now, JJ, and it's totally different for me now because like I'm at least uh way more experienced than I was
oh
when
yeah,
we started. And yeah, I mean, like the game is so tough, like you have to be stingy, right?
oh
Like,
God, yeah,
or if
yeah.
you're out here being like loose, you're not gonna win.
No, it's hard, And I was telling this story. There was a brokerage firm in Montreal, and they had a branch in Vancouver, and there were like 50 men and a couple of ladies in there too, and all they did was grind. They were just grinders, right? They would
Yeah.
scalp here, scalp there, and everybody made fun of them. And because these other guys, oh, I made 400 grand this month, I made this, that, but these guys would be consistently making money, and they weren't like they would bring their like they wouldn't carry briefcases, like they carried their lunch in a grocery bag, right? And they would like wear polyester sweaters and stuff. But you know what? When any one of their brokers blew up and needed to borrow 50 grand, these guys were liquid, right?
Yeah.
Like the guy in Rounders, what was his name?
Oh, Kanish.
Kanish, right?
Yeah.
If anybody, like when they blew themselves up, he was always liquid, right?
Yeah.
And that wasn't glamorous, and so that's what we've been doing, a lot of scalping and grinding in this market, and just make a little here, make a little there, it adds up, you know.
Yeah, for sure.
Yeah.
It's interesting. Actually, you bring the Kanish up. I was thinking um along this topic, right? Like we have markets tanking, and like this is obviously across crypto, NFTs
Mhm.
everywhere.
Oh God,
And
yeah.
I was thinking, especially like when that whole Wall Street bets movement was going on, and it was like I mean, I remember thinking, I mean, me and you've had private conversations during that time. To me, it almost seemed like it was like promoting like reckless gambling.
Oh yeah, it was.
You know what I'm
Yeah,
saying? And like everyone wanted to be that gunslinger, and
yeah,
you do we bring this back to rounders. It's like, yeah, it's not glamorous being Kanish, but like
yeah,
those are the guys who have the money at the end of the day, like
yeah.
over the
Oh
long
yeah.
run, right?
Yeah, I mean, when what's his name got busted out, he had to go to Kanish, and
Yeah.
he had to go work for Kanish or whatever, and yeah. So I think trading, and a lot of things too that I've actually started to say now, and I never used to say it in the old days, was people want to grow their accounts, and they'll say, okay, I'm going to take 5 grand, make it 40, and trade that into 200,000. I'm like, dude, you don't have the skill to do that,
Hmm.
right? Start by making a living and being consistent, right? So what we get our guys to do now in the room for people who are new and are just getting consistent is every week take money out of your account, right? So your ego can't get your hands on it, right? And just always pay yourself. And I was thinking over the weekend, because I had a buddy of mine who was having trouble with this, and I said to him, you know, in the old days, before I became a retail trader, I have never wired money into a brokerage firm, ever.
Hmm.
It's always deposit stock, sell the stock, get the money out.
Yeah.
So you sell stock on money, you get Monday, you get a wire on Wednesday. You sell on Wednesday, you get a wire on Friday. Right? That's how we lived. We would never, it was never even thought of to wire a money into a brokerage firm. Right? It's a one-way street. It comes out. So, and the only time I've ever wired money into a brokerage firm was to open my futures account,
Hmm.
right? I've never actually wired money into it's just always the other way. So if we try and get people to think like that, it's a business. Pay yourself, pay yourself, pay yourself, and put something away for when things don't go well, right?
Yep.
Always stash some money somewhere where you can't execute on it, and the old guys in the days would say, it's always good to have an FU million stashed away somewhere,
Yeah.
right?
Yeah.
It's like, nothing says security like $1 million stashed in some offshore bank account, right? That nobody knows about, right? That's always, that there's nothing like peace of mind, right? So yeah,
Absolutely.
just pay yourself, guys, and
Yeah.
girls,
Yeah.
definitely.
Yeah, no, and that's what I love about it. These things we're talking about is they're just they're good practices, right? And if
Hmm.
you're having good practices like over time, you're going to win. And
Yeah,
you don't have to worry. Like people are always like, oh, I want to make X amount of money. I want to make X amount
yeah,
of money. And I think like me and you, what usually our response to people is like just focus on these good practices, do the good
yeah,
process, and then the money will
yeah,
take care of itself.
yeah,
Not
and
vice
learn.
versa. Not like, oh, I want to
Yeah,
make this money and I'm going to do it. Well,
yeah.
you got to.
Well, yeah, it's good to it's good to have goals, but realize that trading is a skill, and it's like say you and I walked into a hospital and said, hey, we want to do a little brain surgery to make a little quick cash here,
Yeah.
or let's do it, yeah, I'd like to do a mitral valve bypass and make 200 grand doing that surgery, right? Did you go to med school? No, but I watched a YouTube video, right? Like, yeah, it can't be that hard, right?
Yeah.
So, and when I say that to people, they're like, oh, I'm like, yeah, this is a skill, and people like, even like poker players, like how much time did you put in learning, watching things with all that stuff and the software and all of that stuff, the preparation you did?
Yep.
It's not like, you went to a bar and you drank some beers and started playing poker and making money like they show in movies.
Mhm.
It's like it was systematic. You ran through scenarios and you did all of these things and nobody sees that part,
Right.
right?
Right. Yeah.
So it's just like anything else, and unfortunately all the boring stuff is what actually saves your butt, in the end, from blowing up accounts.
Yep.
It's that boring discipline, and all that stuff that's not glamorous.
Yep.
It's
Yep. That's exactly right. So yeah, so JJ, so I got we got a question,
Oh.
I was fielding some questions from the room today. Only got one, unfortunately. I was hoping we get a little bit more, but I guess they probably hear us enough. But this is coming from my boy Yusef. Big shout out. He's in Hawaii, JJ. He's a
Oh,
Hawaiian.
cool.
Yeah, yeah, shout
Oh,
out to
how's
him.
it? How's it?
Good dude. So the question he has here is so it's kind of a mold. I'll read it all at once, JJ, and then
Hmm.
if I got to go back and read some, we'll do that.
No problem.
So he says, "What is stepping in front of size? What is an inside bar? How is this applied to lower time frames? Inside selling versus outside selling? How to identify sticky buying?" So I guess that's kind of a lot. Well, I guess
Oh, okay.
we'll start with the first one. So what is stepping in front of size?
Stepping in front of size is what large traders will do, and sort of more sophisticated traders will do when they see a size seller, right? So say a stock's trading at $10 and all of a sudden you see a size seller coming in, right? You see all the bids getting hit. They'll step in front and short ahead of that, like, or front run it, right? That's what we're stepping in front of a large buyer, right? Because a lot
Mhm.
of people who are watching the DOM, that sort of thing, they'll see a large bid show up and they'll jump in front of it to try and front run the order flow, right? Get ahead of that buyer. And so that's what we call stepping in front of size, right? Um, and what was his other question? The
Yes.
inside
So
bar?
yeah, yeah, he has a an inside bar, and how
Yeah.
is it applied to lower time frames?
Okay. Well, for me, an inside bar means, it doesn't take the high or low of the previous bar. So what's going on there is a lack of order flow committed in one direction. So that inside bar is when the market's kind of, like, to put it in a funny manner, it's like the market's taking a bit of a smoke break, right? It makes its move,
Mhm.
and then
Yeah,
you get an inside bar, and it's just kind of chill out for a wait for some more order flow before the next move happens. And that inside bar allows traders to adjust their inventory, that sort of thing.
makes sense. And I would imagine like this, it's kind of like I want to stay out during this time period, right? Like I
Yeah,
probably
yeah, yeah. That's the time where you go get a coffee,
right,
that
right,
kind of thing. Yeah,
right. Okay.
yeah.
All right. So next part of the question, inside selling versus outside selling.
Oh, yeah. Inside selling is just like in the ES, for example, at say 3 o'clock in the morning. If everything's calm, there's no news or anything. Inside selling is, say, a market's at like 5, and it trades at 5 for maybe an hour, 2 hours. People, and it can't get to 6, it can't get over 6. Then people are trapped say between $4 and $5, and then those people become supply when they start selling out. So the market will adjust inventory by selling off, but it won't break like serious levels. It'll hit a level, that selling will cease. The large traders will buy it all up, and then back up we go. That's inside supply. Those are just trap longs, right? Whereas outside supply is what we call dilution, right? That's when a large seller comes from outside and starts selling size into a market, and you can tell right away because it won't hold your market profile levels, or it'll break EMAs, or it'll break your fibs, or whatever you're using to watch price action. It'll just chew right through that, and that's what I call outside supply.
Cool. All right. And then the last part, how to identify sticky buying.
Oh, okay. Well, sticky buying is buying that'll hold settlement, right? Especially in a stock. So, we were looking at what was that stock that you guys were fooling around with? Was it EDU and Dawn,
Yeah,
right?
EDU and Dawn. Yep.
Yeah, so the EDU finally came apart in the last couple of days, right? But
Yeah, yeah, at least
yeah,
somewhat. But it's
yeah,
held decently. I mean, I had some good shorts on it, but yeah, it
yeah,
hasn't like really peeled. I mean, it did today. I had another short
yeah.
on it, but
It,
yeah,
it's it's not bad. I mean, because so it went up like say on the 15th, and the next 2-3 days it held $21.
yeah,
So I would say that was fairly sticky buying for that time. Then
yeah,
it traded another couple of days, and then finally inventory got long, and it broke 1955, but it's still trading above 1807, right? So for me, sticky buying is buying that holds settlement, right? Like look at DAWN. That's sticky buying
yeah, yeah.
because
That one, yeah,
after it made its move, it
got stuck.
still has not. Yeah, it's
Yeah,
stuck, right?
yeah,
And sticky buying means two things. You got people who are buying the stock that are holding it past that T+2 or T+3, or or past settlement. And the other thing is, supply seems to be kind of getting choked off in that. Looks like they acquired all their stock under $8, and they're being very, very diligent, just selling very gingerly. So yeah, that's sticky buying.
yeah. I think I really love that concept because like because we're taught because I short sell.
Oh
Um,
yeah,
and so like obviously like that's very important. Like with Dawn, right? It's like okay, like this thing is not.
it's yeah,
It's not going. It's this. This
yeah,
is real buying. Like it's not.
yeah.
I
Yeah.
should stay far away from this. Like
Yeah,
it's.
exactly. Because
eh,
you could tell. You look at the chart, and I can already tell that the insiders in Dawn, they're like more long-term greedy,
Yeah. Yeah.
right? Because the way these guys think is, okay, we could make, I don't know, we could make 50 million in a week, or we could take 6 months and make 400 or 500 million, right? And that long-term greed, you can see that on a chart by the way it trades.
Yeah.
It's like they sell a little, and the so that's a good thing to that's a good question. Yeah.
Yeah. Yeah. Yeah. Yeah. I stayed clear away from Dawn since
Yeah.
the one day we were talking about it, but I keep taking stabs at EDU short.
Yeah.
But that one I've traded so much over the past, JJ. Like when that one unravels, it fucking unravels. I mean, as do a
Oh
lot of the
yeah.
China stocks. You know what I
Oh
mean?
well, yeah. I mean, hey, like
Yeah.
I mean, all my guys who did China deals, and
Yeah.
not that, yeah, I don't, not to be politically incorrect, but hey, they're gonna sell their paper.
Hmm.
They're gonna sell, right?
They sure are.
Those Ferraris, the maintenance on those things is kind of expensive.
JJ, oh man, I was excited. I thought we were going to get this Bloomberg reporter who covers the China markets,
Oh,
the
cool.
China financial markets. Well, no, well, because I had all these questions
Yeah.
for her on the China markets. I feel like not a lot of people talk about these things, and me and you talk behind closed doors. There's
Oh,
a lot of
yeah.
stuff I think going on in there. But the compliance department said no, she couldn't come on the podcast.
Oh, really?
Yeah,
Oh, that's funny.
Bloomberg
Bloomberg's.
compliance said she couldn't come on the podcast.
Oh, come on, Bloomberg.
Come on, Bloomberg. I want to know.
Yeah.
I want the. I want to. She's a great follow on Twitter. I forget her name. Um, But yeah, the China market is interesting, is fascinating to me. It's a
Well,
shame.
yeah. I mean, I took so many Chinese companies public. I mean,
Hmm.
living in Vancouver, it was a big thing. I told you about that pencil company. We took the $17 a share.
Yeah.
Hey, there's pencils for God's sakes, but they bought it, so we sold it. And sold it all the way up to $17. It
Yeah.
was that was
We'll have to find somebody who covers the China markets, try and get them here on the
definitely,
podcast. If any of the
yeah,
listeners, if any of you guys know, message me or JJ for any
definitely,
recommendations. But
yeah. We'll have to get like Shanna to work her connections with with some of those guys from the business news outlets, like
yeah.
Charlie Payne, Billy
Yeah.
D. Williams himself. We got to get him on the podcast.
We sure do. That'd be
Yeah,
a great one. That would be a great one.
yeah,
Oh man. So, with that, that will conclude today's episode of Confessions of a Market Maker. If you guys enjoyed the episode, please like it, leave a review for us. If you guys would like to join a supportive and professional community of traders, you can join JJ and I at microefutures.com. JJ, it was fun, man. It was good.
yeah.
Just
This
getting
was
back to
good.
me and you, man. It's
Yeah,
reminiscence of like when we first kind of started it, man. We'll have to do some more
definitely,
of these ones, just me and you.
definitely some market updates. Keep people in the loop here.
Absolutely, absolutely. Any parting thoughts? Parting thoughts?
Oh, just try and just watch your risk over the next little while, and trade. Just be tactical about your trading. And don't force it. Things will change, and if you've had a bad last couple of months, don't worry. These things always swing, and the education you get will help you in your future trading years. So just keep your head up, and if you need help, reach out to us. We're always around.
Yep, yep, absolutely. Great advice. So for the Gorilla of House Street, I'm Paulie Walnuts. You stops though.
Good night.